Take us through what exactly the narrative is about the American consumer, and will they be able to withstand what's happening right now with inflation?
Yeah, Don, we've had a rough retail earnings season so far, and it's probably going to continue that way. And generally, what you're hearing from companies is the top line is holding up, but there's massive cost pressure. So we've seen all this margin compression. What we're also hearing is that the high-end consumer is holding up much better than the low end, and even trading up in some cases. You know, Chanel had great numbers. You're just talking about Williams-Sonoma's numbers. Apparel, clearly, we are way over inventoried here, and that's where we're seeing the most problems. We saw Abercrombie, American Eagle. You're probably going to hear the same thing. The problem is brands are trying to order early to get stock because remember, just a few months ago, nobody had any stock, and therefore the markdown cycle has gone back to, let's say, pre-COVID.
So that markdown cycle, I mean, we talk about this kind of, they mention it as a promotional environment, and they have so in the past. Are we going to expect to see a promotional environment as we head towards the summer? I'm not even looking at the kind of fall back to school season just yet, but how are these retailers tackling this, and which one of them is doing it better than others? I mean, I can see the stock reactions to kind of get an idea, but in your mind, who's doing it best?
So I think what you're seeing is most companies know that a lot of their stuff came in after holiday, and also, again, they ordered too much, so they're clearing. You know, Target was very upfront about it. If you go on their website, you can get a grill 30% off. You know, all the stuff that they ordered too much of it didn't sell. So I think, you know, there are opportunities in retail, and you look at the stock action yesterday. You know, Dick's Sporting Goods, they have 40% inventory rise when their sales are down. So you're going to see a lot of discounts, but I think you're going to see a clearing of the decks here. I think the inventory to sales ratio spread, which indicates the most markdowns, are some of the highest we've seen historically. So I think we're perhaps at the moment where we're at a clear the decks moment for retail.
So if it is a clear the decks moment, what exactly will investors be the most focused on? We know they'll be focused on all the metrics. But will it be that top line growth that we've been seeing? Will it be the profit numbers given the cost pressures? Will it be margins? What exactly is the key to this retail trade going into that fall holiday shopping season?
Yeah, I think that's a great question. And I think that, you know, we know that companies can't control the cost side of the equation of what's going on in the world right now. But we do want to see that traffic is remaining strong. And of course, top line, you know, you look at a Target, their traffic was still positive. So the mix is changing. We know that. We know that people were spending on stay at home and athleisure, and now they're spending more on perhaps traveling and other things. So there's going to be a shift, which affects margins. But at the end of the day, I think what we're going to focus on is the overall top line number and make sure we don't hear deteriorating trends. And by the way, Dom, most companies told us that May was better than April, that they were kind of encouraged. There has been a lot of volatility, but there's been some positive signals here.
All right, Stacey, before I let you go, just a few moments left. Top picks from you?
I would say I'm still a huge fan of Williams-Sonoma, and I think Target is interesting here because, again, they're clearing the decks. That traffic is positive. They're the new modern department store. And of course, Nike, that's going increasingly DTC. So there's an organic margin story there.